Thank you for tuning in for another video. So I thought I would do another follow-up on the condo assessment video that was done a couple of years ago. So if you watch that and you want another idea, I do have one. So I will go into another idea as to how you can not avoid it, because you can't avoid that, but how you can recoup some of that money that you have to pay out of your pocket for the special assessment. So this is assuming that you already have the condo, whether or not you have a mortgage on it, it doesn't matter, okay? So you have a mortgage, you have a condo, and there's a special assessment coming up. So you know that it's about to happen, whether it's in 3 months or 6 months down the road, and you're gonna have to have the funds available for it. Okay, so if you are not in that situation, meaning that the special assessment has already happened, then you can't do this, okay? So this is only if the special assessment is coming up, okay? So if you are in that situation, then this is another way, another option, okay? So what you do is you move out of your condo. I know it sounds a little bit odd. Okay, so here's the logic behind it. Okay, you move out of your condo, and whether you rent another place or you buy another place, that's a personal decision at that point. Okay, but then what you do is your current condo, the one that you are going to have the special assessment on, you rent that out. Okay, and basically because you're renting out your condo, it becomes a rental investment property. And because it becomes a rental investment property, any of the expenses that you incur on that property becomes a tax deduction against your tax return. Okay, so the way that works, it's called the Smith's maneuver. Okay, so every expense, that means your mortgage payments, hydro, Enbridge, property taxes, your water, everything becomes a tax deduction, including your special assessments. So your maintenance fees would also be a tax write-off as well. Okay, so the way that works is you move out, okay, you list your condo out to rent it to whoever, okay, and make sure you're cash flowing on that as well, okay. And if your property is, let's say in downtown Toronto, like my condo is, there really should be no reason for you not to cash flow on your condo. Okay, so if you need help with that, make sure you reach out to me separately. Okay, I'd be more than happy to walk you through that. So then once you rent it out, okay, you have rental income coming in, you pay your maintenance fees, property taxes, insurance, all of that stuff. You pay the special assessment off, okay, and then in the following year, when you go to file your taxes, you fill out the rental statement form and then you submit that into CRA. Okay, and in that rental statement, you would include the amount that you paid for your special assessment. And so if your special assessment is spread over like a January, December timeframe, then you're reporting it in 2 years, right? So now keep in mind that the strategy is not for everyone, okay, because it does require that you move out, okay? And then you would have to either buy another place or be able to rent somebody else's place, okay? And then it also does require for you to leave it as a rental place for a long period of time. So not just 1 or 2 years, right? But pretty much for a long time. And I would say long, like as long as possible, like more than 5, more than 10, if you can. The longer, the better, basically, right? So that is another idea that I didn't include in the first video. Okay, and so I thought I would share it because there's just been, I can't believe how many people actually watched that first video. And so obviously there is an interest in it in terms of how to handle that special assessment. So the renting it out is one idea. The other idea that I want to mention quickly is in the first video I mentioned, you know, you have the option to use a credit card, and it's not one that I would recommend. So now if you do have access to credit cards where they are allowing you to do the transfer at 0% or 1% or 2%, and you don't pay any interest for 6 months, okay, then what you might want to do is use your credit card, put the special assessment on there, and then use the money transfer option from another credit card so that you're not incurring interest for 3 months or 6 months or whatever that time frame is. So you do have to do some calculations, and then you have to make sure you stay on top of that. But basically, you could carry your special assessment amount for 6 months to a year and a half if you keep moving it from a low-bearing, no transfer credit card to another low-bearing, no credit card balance transferring for a while, right? So you're basically moving money from Paul to pay Peter, but at some point that does buy you a little bit of time, right? So those are 2 new options for the special assessment. So I hope you are not hit with the special assessment. I know what it's like to be hit with that and then have to be like, oh my God, where do I come up with this money? So I hope that you do not get hit with that. But obviously, if you're watching the video, then you're probably in that position. So good luck to you.
All right, and before I forget, I am not a financial advisor, I'm not a lawyer, and I'm not an accountant. So all of the information that I'm presenting is really just my ideas, my advice, my opinion. So before you implement any of it, get somebody else's opinion on this. Show them my video and see what they say, okay? So just a little disclaimer there. So